I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. You know, the Fed's been shrinking its balance sheet since April 2022.
It appears that everyone right now seems to be kind of laser focused on rate cuts, but arguably the real story and what it's not part of the discussion for whatever reason is that the Federal Reserve has officially ended quantitative tightening as a policy, the opposite of quantitative easing. This is big. We've talked about it in the last few weeks and the last few months. Some analysts are saying actually it's their opinion that this is the biggest shift in liquidity since all the way back in 2020. And it actually could, in some senses, signify a turning point that sets up crypto for 2026 because we've had a pretty rough second half of 2025. Japan is also playing a major role. We talked about them and their contribution to this whole global liquidity crisis. We're going to get back into that. We're going to make sense of this, analyze the situation. This is your Altcoin Buzz News. For 3 years now, since 2022, actually, the Federal Reserve has been shrinking its balance sheet. And it's been doing that by letting treasuries and mortgage assets mature without replacing them. What naturally happens next, and the consequence of that, is that the money does not get recycled. It just kind of vanishes from the system. So it's a bit of a disappearing act. So that's 3 years since 2022. Over the course of those 3 years, the Fed moved over $3 trillion worth of liquidity. And that has been one of the main reasons that things like risk assets, so stocks, crypto, obviously, altcoins especially, have struggled. I'm not saying it's the only variable, but it's one that has, factored into that span of time in a pretty appreciable way. There's just no new money coming in to buy anything. In fact, money is being taken out of the system instead. Crypto Rover summed it up pretty well, saying, quote, "Most people are watching rate cuts, but the real event is the end of QT." Once again, quantitative easing. And I would tend to agree, or at least it's a bigger deal than most people are making of it because it's just not being discussed at all for the most part. It represents a shift in structure at a more fundamental level. And let's get more specific here because what the Fed just announced is that starting December 1st, so this has already taken effect, the Fed is doing something that's just very different. When mortgage assets mature, instead of letting that money vanish and just disappear, instead they're taking the cash and reinvesting it straight into treasuries. This is not QE, so don't let anybody oversell it, but it does slow the balance sheet shrink, right? It stops the same kind of liquidity drain that we've been dealing with these last few years. And it's kind of like a soft easing. Not stimulus, but no longer a constant squeeze. And that matters, of course, because the treasury market is getting hit with very heavy debt issuance. Someone has to absorb that supply. And when the Fed becomes a steady buyer, even passively, that obviously adds to market demand. More demand, usually, again, this is a little bit theoretical, but that's the best that we have to go on. More demand usually means lower yields, generally easier financial conditions, and a lot less pressure also across various markets, all kinds of markets. And also when the Federal Reserve absorbs some of that supply, it means that large institutions no longer have to. And then that frees up liquidity to move elsewhere. Historically, that elsewhere eventually includes risk assets, and a subsector of risk assets, of course, is cryptocurrency. Here we have Tom Lee, who basically says the quiet part out loud and articulates things pretty well.
I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. The Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy. So I think people got cautious, but now have to performance chase. And then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
He calls quantitative tightening the biggest liquidity drain since 2022. And that's pretty much exactly the point. When the drain stops, markets tend, at least, to front run the next phase. What does this all mean for crypto specifically? And perhaps more importantly, altcoins. Can we expect some sort of rally as a consequence soon? The numbers behind all of this that we're talking about here are not small. Thorsten Froelich pointed out that in late November, actually, around $7 billion of mortgage-backed securities have matured. Now, under the old system, that money would have rolled off, vanished, disappeared, like we've been saying. As an example here, under the new system, it gets reinvested and scaled out. You're looking at something like $30 billion per month being recycled into treasuries instead of just exiting the system altogether. Let's talk about some historical precedents here. In 2019, we saw QT ended in that year as well. The alt-BTC ratio started a multi-year uptrend. It did not explode immediately, not at all. It was a lot more subtle than that and a lot more muted. But there was a significant rally that began a few months later in March of 2020. That's when the Fed moved from QT to QE. So we have a very similar setup today. And it's not to say that history is going to repeat kind of one for one, but this does seem to be a bit of a moment when markets begin front-running liquidity. So yeah, rate cuts matter. I'm not discounting that, but the big catalyst has already happened. Liquidity is no longer being sucked out of the system, and December, as a result, may feel the effects of that. So let's talk about what comes next here. Ending QT would represent step one, and the question then becomes, will the Fed start cutting, or maybe will they stay higher for a little bit longer? We're not exactly sure. Weirdly enough, one of the biggest things affecting that decision isn't even the United States. Here we go back to what we talked about earlier in the week and the country of Japan. Because Japan's basically been the whole zero rate country forever, meaning cheap money, nothing yields anything. But now all of a sudden they've got inflation pressure. They've got a strengthening yen, which we're not used to, and they're being pushed to finally move rates up. And if Japan were to tighten even a little bit, that does have an effect in terms of global money, which starts shifting as a result. That matters because Japanese investors are massive buyers of US treasuries. And globally speaking, the carry trade is to borrow in yen for like nothing, for basically next to zero, and then invest in US dollar assets of all different kinds. That historically has been the play. That's been something that's just by default really been there in the background as far as the investor class and the options that they've had. And so if Japan were to suddenly give them a reason to bring money home, that translates into less demand for US debt at a time when the United States pretty much needs buyers more than ever. And higher borrowing costs just cut off this global liquidity solution entirely. And so this is kind of where the Federal Reserve's problem starts. If Treasury demand drops, yields can spike. If yields spike, then risk assets get punched in the face. Stocks are going to wobble. Crypto is going to get hit very, very hard. Alts are just going to get obliterated. But what does the Federal Reserve do? Well, they try to soften it without saying it out loud. Ending QT and recycling those mortgage paydowns into treasuries is basically the Fed saying, look, okay, we are no longer going to keep draining liquidity while the world is shifting. The bottom line is that QT doesn't guarantee any kind of immediate rally. I don't think it's going to really guarantee any sort of notable response in the metrics at all, to be honest. But it does change the backdrop. Liquidity is going to stop getting drained. The Fed gets more flexible and risk assets are going to be able to breathe. They'll have a little bit more oxygen. And then when the whole macro tide turns, be ready, because when that happens, when that happens, cryptocurrency, but especially altcoins, tend to move the fastest. This Altcoin Buzz Spotlight video is sponsored by SWI, which is a top mover today in the crypto markets. It is up over 18% on the day from a low yesterday of about $1.34 to what is now $1.71. And that is despite a 43.92 million SUI unlock on December 1st, which certainly underscores some very strong and renewed interest in this altcoin. It's a surge that seems to be driven by the recent approval of SUI trading for New York users on Coinbase. This is a big milestone that expands access to major US markets. Plus, it also boosts liquidity and sends a strong credibility signal. This Coinbase listing triggered a massive buying momentum. Spot buying went through the roof, and the 24-hour trading volume clocked in at $1.6 billion. That is up by 84%. And after a 3-week downwards trend, this really does put SUI back in the middle of all the action. Technically, this rally actually pushed SUI above the Keltner midband with volume backing. This suggests real accumulation rather than just a short-lived spike. SUI's next short-term resistance is now at $1.90. Its main support line is now $1.32, but breaking above the $1.74 price mark may well provide some nice room for further upwards movement. And this opens the door for the next moves towards $1.85 or $2.05 as a possibility. SUI's ecosystem tokens have also rallied. Walrus here, ticker WAL, is up nearly 10% in these last 24 hours. Deepbook, ticker DEEP, is also up nicely right now at 4.4 cents. In fact, here's a list of other tokens that went up in the double-digit percentages. Cetus Protocol, ticker CETUS, SUILend, SEND, Bucket Protocol, BUT, Navi Protocol, NAVX, Bluefin, BLUE, SUI Name Service, NS, and Heidel Protocol, HAEDAL. All of this is exactly the momentum SUI and its ecosystem have been waiting for. Bitcoin is seeing a steady upwards trend, and at the same time, SUI is outperforming almost all other altcoin projects. And traders should probably watch closely whether today's lift can evolve into sustained momentum, but the signs look good for the time being. And just to close off here in the context of all the news that we've discussed, M42, Constellation Network, and DFNN are all teaming up to launch the first Web3-powered national lottery in the Philippines. The idea here is to simply blend AI, blockchain, and cryptocurrency such that people can buy lottery tickets using digital assets securely and, probably most importantly, transparently. With blockchain handling the verification and AI managing compliance, the whole system here becomes smoother and much, much more trustworthy. The partners say that this could become the model for upgrading traditional gaming and finance all around the world. Check out this article on altcoinbuzz.io for more info. I will link to it in the description.